Good morning. It's Thursday, October 3rd, about 6 a.m. Central Time. If you haven't done so, please like and subscribe to these videos, and also be sure to follow me on Twitter. We are going to be putting out a lot more intraday content, especially as geopolitics play a role. Some of this economic data sends these markets a bit wild, and we believe that we could put out more actionable signals. If you follow me on Twitter at night, I'm going to be a little bit more transparent, and I tweet out some of the different slides that I get off the Bloomberg terminal as far as inventories at LME, the Shanghai, the COMEX, looking for potential squeeze plays. I look at inter-commodity relationships and also different calendar spreads to see variances in these markets that could lead to where the next trend can unfold. So looking at the overnight price action, a lot of red on the screen. The only green on the screen is the crude oil market, up about 2%, 71.52 for the November contract on crude oil. Heightened geopolitical tensions after yesterday it said that Iran had concluded what they were doing, and that's where crude oil futures really came off, and also was fueled by a bigger than expected build on the inventory data. I talked about that $75-80 call spread in the January crude oil contract. Many of you took that off at that higher level. Now looking at the precious metals overnight, gold futures down about $2, 26.67. I believe that gold futures are really trying to digest what's going on with the dollar index, the Middle East tensions, and things like that. I believe your critical level of support and intraday pivot on that gold market is going to be right around 26.50 to 51. Now looking at December silver, down 15 cents, 31.76. Did try and break out to the upside, got through that upper boundary, ran up quite a bit, saw quite a bit of profit taken unfold at that higher level. December copper, I think, gives you the clue as far as what's going on in the silver market, down 6.3 cents here at 458. That's a 1.3% drop in the copper market. And then you look at the January platinum, down $20, dipping below 1,000 at 996, and palladium down $27 at 990. Something important to watch here is the gold silver ratio at about 84 to 1. So a few things here to monitor. The Hang Seng had corrected overnight as traders book profits and the Chinese stimulus euphoria wears off. So if you look at the Hang Seng, basically it's been bouncing around really flat for quite a while, takes off like a spaceship here into outer space with a massive short squeeze ahead of a Chinese holiday break. So any of these Asian markets that are open, we're starting to see some profit taken occur, and it's spilling over into Asia related commodities. So getting into a couple other things here. Yesterday, we saw the Treasury and gold market both pressured by stronger than expected ADP jobs data. Saw an uptick in the jobs data. What did that do? It boosted the dollar index. It boosted interest rates as well. And then you get the 1-2 punch where Fed Speaker Barkin, he's a 2024 voter, very important to note that, sees two more 25 basis point interest rate cuts in 2025. The baseline looks like it's now becoming 225 basis point cuts after Jerome Powell's speech. So that's going to be something I'm going to talk about in a minute. Again, back to the silver market, it was the LME. If you look at the rolling 3-month calendar spreads, and the LME did have to address a statement that they are monitoring the situation in aluminum. That's where you get that broad-based buying in silver and copper and platinum, anything that's closely correlated towards aluminum, and they shot up to the upside yesterday. Again, it was met by a lot of profit taken. That's why there was no additional follow through. I looked at the ETF holdings on silver, and no real jump up here as far as more people getting involved in that market. The market that I think has the best chart pattern as far as inventories besides aluminum is the copper market, where world inventories are continuing to decline. So a few things here with the ratio. I believe that right around this 83 to 1, we're still in the accumulation phase. So this is where people see that silver futures, those silver bugs, the silver bulls, they're still adding to positions here. They're actually looking for some corrections here. We don't want to see it dip below that 30.03. That's when the Fed had announced their first massive interest rate cut. I think below $30, you could see a small washout here by the weak hands, the stop losses below there. But I think that we'd go back into more of a consolidation phase. The areas that I'm looking at when you go to the ratio is historically, like COVID, market 60 to 1. Our baseline upside target for gold is $3,000 in the next year. We believe that at 60 to 1, that puts silver futures at $50 an ounce. You go back to 2011 when we started to see that squeeze unfold. We started to see inventories drawn down. We saw new uses for silver, things like solar or green energy really take underway. It strained the mining production and the supplies out there. That put it at 31 to 1 at $3,000 an ounce. That's about $80 an ounce on the silver market. So getting into some things here we're watching today, again, the CME Fed Watch tool, that is starting to slide, and the baseline is becoming a 65% chance that you have a 25 interest rate cut and only a 34% chance of a 50 basis point cut. Now, a couple things we got to monitor here. The initial claims data, and this is important. The initial claims data, if it comes in lower than expected, my estimate is for about 215,000 jobs. The consensus is 221. You also have Raphael Bostic, a Fed speaker, coming out. He could reaffirm the 25 basis point interest rate cut theory, and that all could put some pressure on that gold market. So I'll be monitoring 2650 as my first level of a possibility of an entry, and then below that would be 2634 on a volatility type approach. Now tomorrow we're going to have the payroll data. I believe that we might get a small uptick, 165 versus a consensus of 146. I think the unemployment rate will most likely come in line with expectations, and that also could put a little bit of pressure. So what I'm saying is over the next 48 hours, I would be a little bit more specific on the entry, and then also really focus on monitoring the position size because of the fact that we've got a couple phase transitions going on in currencies. Remember, some of these markets don't like a higher dollar index. Well, guess what? The euro currency has gone through a phase transition where it's gone to a neutral trend. The dollar index has gone from a bearish trend to a neutral trend. All that kind of weighs in on these different markets. You get into the gold market, you could see that it's starting to consolidate here. So what you want to do is you unpack and you take down, this is if you're an analyst, you come down and you do more of a macro top-down, bottom-up approach on there, and you look at what's priced into the gold market and what could set the next trend. So what was priced in when we were making new all-time highs was 200 basis points of interest rate cuts, 100 basis points throughout the rest of 2024, and 100 basis points into 2025. Now, if we get the 225 basis points, that starts to price out those interest rate cuts, and that's where you get gold futures not making new all-time highs. So that's something that we do unpack and we look at. And also another thing that's really important to monitor is that 70% of Chinese household income is tied in their net worth is tied into their real estate market, their stocks, and their bonds. Well, their stock market has gone through this massive explosion upwards. I believe that many of them are going to unpack some of that gold that they've had. So you might see some liquidation there, and they might start to go back into the equity markets. We're seeing their interest rates come down just a bit, and it could play some role as well. So a longer video, and that's specifically why we're going to do a bit more intraday videos when we catch up here, or as far as if our thesis starts to change throughout the day. You got any questions, you give me a call. You want to be a client of Blue Line Futures, give me a call. My phone number 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.